Good morning, traders. Welcome to this live intraday strategy webinar on SB Trade Desk. Today is Wednesday, January 31st. Closing out the month here. Great to be with you guys. Michael Boutros on the mic. D, good morning. Eman, Kelly's back in the house. Took off touring to Machu Picchu, back into trading. How was that? I've been meaning to make that trip. Kelly, great to have you back in the room. Christopher, Mark, Pete, Peter, Pooja, great to see everyone here. So, some frustration for me, but I'm trying to take a step back, remembering that it's the close of the month. It's the close of it's the start of a new month, and obviously we still have a lot of event risk on tap with the FOMC interest rate decision. At 2 o'clock today, we get the release of that. There's no policy or there's no presser for that, so it's just going to be the release of the policy statement. It's just going to be a sort of run-of-the-mill run. And then obviously we still have non-farm payrolls on Friday. My frustration is the fact that some of these ranges just won't break. And patience is the name of the game. Shouldn't be surprised. I don't know why I got myself caught up in looking for a little bit more of an aggressive move here. But, last night's State of the Union address didn't really make much of a fuss as far as markets were concerned. We got a strong ADP figure this morning as far as employment here in the United States coming out at 234,000. We're only expecting 185. Now, you did see a slight downward revision last month from 250 to 242, but even that didn't give any really volatility. The dollar still trading pretty much close to the lows of the day. So a good time to kind of, just like I said in the update yesterday at the teaser, guys, be nimble. It's a good time to be nimble. Pick and choose your battles. Be very meticulous with your entries. We're just starting up a new month. We have key event risk both on the tail end of this month with the FOMC and then right into the start of next month with non-farm payrolls. Do keep in mind also, just a quick note, we did get the release of the November GDP figures from Canada earlier as soon as we started the webinar. Pretty much in line with expectations. Got a 3.5 clip for the year-on-year. We're looking for 3.4. The month-on-month came in right in line with 0.4%. So, if anything, I should put that dollar CAD in a little bit more of a stance lower like we're looking for. Okay, on the menu for today, we'll take a quick glance at the DXY. The thing is just sitting there, still doing nothing. The euro dollar, Aussie dollar from last night, still looking for possible exhaustion if we crawl just a little higher. Bitcoin, I just kind of been throwing that out there. You might have seen it presented yesterday on Daily FX as well. Not a trade I definitely recommend anyone trying to get short on, but certainly recognizing the risk still remains. Kiwi dollar, Aussie Kiwi, and dollar yen. Dollar yen's, it's kind of a neutral stance here. Still want to see it lower, but not really giving us much of a momentum clip just yet. So we might have to wait for a little bit more clarity on that. Pound CAD and pound dollar to wrap things up. Any other questions or trade setups you guys want to cover? Any questions at all throughout the course of the session? As always, feel free to throw them on the message board at any time. All right, so let's jump right in. Here's what the DXY looked like, last night. Okay, and the weekly opening range had set right below 89.55. That's what we noted was interim resistance, into the start of the week. A break from that, I think you would have seen a little bit more of a risk run towards 90. Broader invalidation still at 91, way at the upper parallel here. So, I'm looking for strength to fade. A break of the weekly opening range would put us, again, looking for continuation. Now, you've heard me and Jamie cite these levels a couple of different times. Soft target at 88.70. Okay, we basically are knocking on the door there. But it's really, for me, 88.27 to 88. And that's based on the longer term charts. That's based on slope. That's based on also just the longer 50% retracement of the entire advance from that 2011 low. Okay. Yeah, the 2010 swing high. And you have these slopes. This is just a parallel, one touch, two touch of the same slope. The lower median line parallel that we adjusted last week is just lower, nestled into 88. So something to keep in mind. Again, you might have just seen me delete this. This is the analog that we've been working with on the dollar index. And certainly, for the next week, 2 weeks. Don't be surprised to see some back and forth until we finally resume lower. Now, I don't know if necessarily if we get into the 86 region, into that basic trendline support off 2011, but definitely the lower parallel of this is sort of where my initial focus is right now. So 89, 55, still resistance, you know what I mean? Bearish invalidation for the broader downtrend all the way up here at 91. I give you these levels just to know, if hell breaks loose tomorrow, you kind of want to know what to do if things completely go against us. But at this point, we're still looking for a drop into this region. Okay, and the game plan was, again, we're keeping in mind that we're still an oversold. So we can stay in this condition for quite some time. Here's a length of span from last year that went from July all the way till basically the open of October, almost September, where this thing stayed in oversold condition. What happened? Prices just continued to break down. So until we recover from that condition, the propensity for this thing to continue to move lower is there. Again, keeping in mind that we're looking at this from a weekly standpoint here. Okay, here it looks like on the daily. Same thing as far as the momentum signature is concerned. You're in oversold condition. Not only are you in oversold, when you tried to recover, you found resistance at 30 and pushing lower. So the propensity, the risk is still lower. Specifically on this point now that we've broken the initial weekly opening range, the risk is against this week's high, period. And guess where this week's high is? 89.55, or a little bit higher, 89.16 change. But you get the picture, right? So even from a real near-term stance, remember the monthly opening range for January broke here on the 12th. And certainly since then, we've been looking for a late month low. Well, it's pretty damn late in the month. It's the last day, guys. My concern is for chasing, and I can't advocate for any of you to chase on the last day of the month into support. If you're not already holding dollar short positioning, look, I mean, you could take a stab on an intraday position. Sure, I'm never going to stop anyone from that, but nimble, quarter leverage to a third leverage from what you normally trade, and recognize the levels you're coming into. Okay, recognize the levels you're coming into. So 88.71, that soft target 2010 high, 88.27, and again, 88 handle. These are areas of which even the near-term slope, just from last year's high, starts to come into play. All right. E-Man says, morning to you. A morning to you as well, E-Man. Kelly's saying you all have to go. Oh, to Machu Picchu. Yeah, I know. I have to do that. That's awesome. Were you dead tired after that, or was it still enjoyable despite the fatigue? Okay, that is DXY. Let's move right on. That's number one. Number two is Euro. So obviously the implications are for the Euro are similar. You could see a little bit more upside to go. But it's very hard to advocate trying to chase this from here. I just wanted to bring up first the weekly charts, just to put things in perspective, guys, from where we're trading. Okay, basic trendline resistance extending off the highs from 2008. You tagged it again in 2014. That comes in just higher. You have the 618 retracement from the decline from that 2014 drop, and certainly that gives you 25.98. Okay, support right along former parallel resistance. This formation, this slope has been pretty definitive, okay? Parallels of it have offered clear breakouts. Even the 50 line was a clear launching point back early last year. Here's the upper parallel catching last year's high, okay? Here's the breakout. You're expecting this thing to move higher. Weekly, we're in overbought, just like we are in the index, same thing. While we're in overbought, propensity to move higher. That's the weekly chart. Euro on the daily, there's that 25.98, that 618 retracement. This is from the decline off the highs again from 2014. Near-term support, former slope resistance, or former upper median line parallel. That's what you would need to break to interrupt things. But even if it were to drop that low, you'd still be looking for recovery, a hold for the extension back into 26. Daily chart, still an overbought. Okay, I think yesterday I gave you the whole breakdown. Yeah, so here's the weekly, daily, constructive right now, while above that confluence region. Looking for 25.98. Intraday look like this. So the weekly opening range, in my humble opinion, had set shape just above that median line that we've been following off the lows from December, right? The late December low. Upper parallel, wasn't the cleanest hold, but it held. Median line held, bounced through. We failed to close above that upper parallel. I noted that yesterday in the pullback, we found basically support at the median line. So you had a weekly opening range right above the median line. You see a topside break. You still need to get through 25.38 and 25.98. Both of these, in my humble opinion, would be areas of which, if you're long, you want to take it off the table. And if you're not holding anything, I think that would be an area you'd start to look for exhaustion. Now, I give you these levels with that caveat that I'm looking for exhaustion, that we have to see price react there. We have to see some sort of pullback and failure, or even if we break through, failure to close the day in a pullback, something to suggest it's going to hold. I'm not going to just have a sell order here at 25.98 when we're breaking out. But certainly just above 25.98 is that longer term basic trendline resistance. Excuse me. Here, right? It's like 2650 or so, 2660. So this whole region right here, if we just shoot up into it, you start to be concerned for a little bit more of a hold on the advance. Also keeping in mind you have some swing lows right back from here. Take a look back at the 2011 swing lows here in this is the early 2012 swing low. And then here in 2010, decent pivot in price. Again, tagged here. All converges right here. And again, this would just be an interruption. Not that the whole thing's going to necessarily reverse off it, but if you're holding longs, really important area to start to consider. Any questions on where we stand in the euro? Now, the question again becomes, if you're not holding open positioning, how do I get into this, Mike? Well, this looks to me like we're making an objective break of the weekly opening range. Here's your weekly open. You pull back, you test the lows twice, you break through, and this kind of had me thinking this was exhaustion because we failed to hold above it. But here's a secondary run and push. FOMC is on tap today, NFP is on tap on Friday. You still could get another run back into that 25.38. It's just the highs that we made so far for the month. But really, it's this region here that we're looking for the tag of 25.98. Would be a sweet, longer term 618 key for consideration. That might offer a little bit more of a kickback opportunity. Questions on euro. Again, one of those clean monthly opening range breaks. There's the break, looking for a late month high. A lot of these trades don't work out quite this well as far as the clarity of the opening range, but a lot of them did this month. Again, keep in mind, we're heading into the close of this session. It's going to be the close of the calendar month. Sometimes you'll see some portfolio rebalancing. It could cause some weird intraday price action. So definitely heading into the U.S. close, being mindful of those conditions. It's not a quarterly close, so that's when you tend to put a little bit more emphasis, be much more timid in taking any new positioning. But still, with that being said, just keep in mind. Okay, that's euro, number 2. Number 3 is Aussie. And here's Aussie traveling back towards the highs. This trade hasn't really changed in quite some time, guys. We've been looking at this same ascending channel off the December lows. And I've been presenting this chart as is for quite some time. There's been no change. We were looking for a little bit more of a clear-cut pullback off of this, especially with that secondary high. I want to see this drop towards 80.26. And like I said on the Sunday update, that's the break that we would need to see, okay, to kind of validate at least a downside break of this near-term channel, a pullback, if you will, in Aussie dollar. Doesn't look like you're going to get it. It turned right ahead of 80.26. The high day close, again, from last year is 80.54. That's been sort of a decent pivot. But long story short, 81.25, 81.63 to 81.53, both of these levels There's no reason not to do the same thing we did here, here, here. You know, we took shorts on all of these. This was the only one that didn't work out at all. That worked out. That worked out. Then we got stopped out on the rest last week. So if we get up there again, and dollar index specifically, if dollar index makes a slide down to 88, I would love to try to press or try to get some sort of exposure off that for a pull lower. Here's Aussie again. You know, objectively on the daily charts, this is just a basic swing high from late 2015. It's also 100% extension from the ascent off the lows. Here's the reference points for that. Your 2016 high, low, high, or excuse me, high, low, high, low. You know, it gives you 81.53. So that converges with a basic trendline resistance off the 2013 swing high, late swing high. Boom, boom. Nice little spot. So let's see how this pans out. At the end of the day, if we make a daily close above this region, you know, there's nothing to stop this from going to 82.80. It's just, I mean, even on this trade, yeah, we're still in overbought condition, but it's been marking divergence like for the last couple of days into those highs. You look at Aussie on the weekly charts, you know, again, that level comes up 81.68 on this one. This is a longer term 100. This is not taking this high, low, high. This is taking this, excuse me, low, high, low. It's this low, high, low. But interestingly enough, it gives you something within that 10 pip realm. So we're basically looking at the same thing here. But, you know, this thing has not seen a down week, guys, since the first week of December. Last time we saw that was right here, and that just still saw a 1 week interruption before continuing higher. Okay. Well, that was same deal here. So 1 week interruption. We actually did travel higher for the next 3 weeks before turning over. That one was a little bit more of a concerted high. In all instances, there was some sort of near-term interruption. So I'm really interested to see how this week ends up. I'm really interested to see how this week goes. It would be a perfect opportunity, in my humble opinion, if the dollar kind of gets one last drop, this spikes into a high, then it turns over. Ultimately, the DXY still is bearish either way you look at it. We're just trying to see if we can play that nuanced little rebound in price near term before this eventually breaks out, before DXY eventually obviously breaks to the downside of that 88 handle. But that's sort of the game plan for Aussie. Any questions on Oz? Looking for a stretch near 81.25 is the basically weekly opening range highs, but you know, ideal scenario, you spike into this region or you pull here, you know, you look for some sort of corrective pullback. Okay, last but not least from last night, just a quick look at Bitcoin. Here's BTC on the daily chart. Basically, obviously, you want to put this in log whenever you're working on these charts, guys, to work with the percentage base of the move instead of just the nominal arithmetic. But looking at this, you know, basically we broke back below that slope that we were following for quite some time off the highs from 2017, the August highs, rather, excuse me. Decent pivot in price. This break was also an objective break of the monthly opening range. Another real clean monthly opening range break. Here's your monthly open, yearly open. You stretch into a high. You test the lows and it bounces and it recovers for 3 days before finally breaking down, testing it as resistance and holding. So you're looking for a late month low in price. You know, the actual concerted low comes a little bit lower from here. This is the structural support that we've been trying to target on this pullback ever since we broke. And that level is 87.28 into 86 or 86.40, 8,643 into 8,728. Lots there. Basic slope support. It's only a 2-point touch, so I'm not stressing that. But you also have the 618 retracement from the advance off the lows that we made in July. You have the 100% extension from the decline off the highs. You know, there is just a lot of confluence region right down there, and a decent pivot in price even extends it down to 83.37. So on the intraday charts, it does have us at slope support. Again, bring this to a log. This is what the chart looked like yesterday. Okay, it did have us at slope support, and that's basically what it was here. We're unable to make a 4-hour close below before popping higher. But this thing, in my mind, stays bearish below 11,160. That's just as plain and simple. It's a decent consolidation range break. 3-point touch on the support really validates it. You even had a 4th-point touch there before the break. And if we are going to be working with this consolidation pattern, well, that shifts the focus lower to at least a move towards 87.28. Keep in mind again that the upper bounds of that consolidation pattern now converges on former basic support, which is a 4-point touch we just talked about, and the median line. So I think it's just safe, kind of not, a little bit more of a clear cut call, let's call it. Below 11,160, you're at risk. Looking for a tag of 93, 9,300. Looking for a tag of 8,728, 8,643. That's a sweet spot. Somewhere there is, I think, is where you start to fish in to see a lot more buyers come in if this thing's gonna move higher from there. But that's sort of the game plan right now, is a focus for a drop into one of these two targets. Any questions on Bitcoin? Anyone actively in and out of this? And if you are, tell me what broker you're using. Okay. So that is Bitcoin. Going once, going twice. Next up on tap is from the previous day's updates on Kiwi. So here's what Kiwi's doing. We started the week, or earlier in the week, we were talking about, all right, look, 73.07 was a level that we were talking about, since last week, essentially on the 25th. That's the near-term support. We came into it, we rebounded on Friday. We started off the week again coming into it, held. And if we were breaking the descending side of this channel, I'd want to see this thing really give us some accelerated drops towards 72.70. Well, you got the move lower, and it turned right ahead of that and started to move higher again. So what the heck do we do with Kiwi? Okay, first of all, I'm not sure if we went over the weekly charts with Kiwi yesterday, but first of all, objective major resistance level on the weekly standpoint comes in at 75.16. Keep in mind again the divergence we're seeing with the new high and not the new high in Aussie versus Kiwi. That's starting to resolve now. Here's this thing moving higher. 75.16 for me is big. It's the 50% retracement of the entire 2014 decline. More importantly, or as well, just below that, you have the high week close. And that comes in at 75.12. So 75.12, 75.16, both of those regions converge on the 2016 highs right here near 74.85 and the upper parallel. This is a long-term median line formation we've been covering since 2011. The lower parallel caught the lows. You've seen very decent pivots along the median line. 50 line was resistance, resistance, resistance on outside day reversal here early last year, or outside week reversal, which pushed this thing lower. That's a big level. That's a big level. So we were trying to play the pullback. Obviously, as you get into the intraday charts, you can see, we were working with a near-term slope here. It looks like that's clearly being invalidated, specifically if we close at these levels again. And again, there's that 75.18 level. 74.80 turns out to be the 1618 extension off the decline from the lows in 2015. So off that ascent, rather. The 1618 extension is there, giving us the same key zone that we just talked about on the daily chart, or on the weekly chart. Excuse me, guys. Does that make sense? Did I lose anyone with that? Big zone, just above 75. Remember that. And into 75. So here's what the intraday chart looks like. Obviously, on that pullback and break of that channel support, we were looking for the dip into 72.60, 72.72. We never got it. This reversed and took us right out. So here's the break of the objective weekly opening range lows. The monthly opening range low objectively broke to, or the monthly opening range objectively broke to the upside. Or there wasn't even much of a range before it just continued higher. So needless to say, looking for that late month high. It's the last day of the month. Could this thing run into 74.50, 75, and turn around? Absolutely. Am I going to play a short off one of these levels? Not until I get some sort of corrective play in near-term price action. But right now, I am expecting this to travel a little bit higher. There's really nothing to put this in this way. Unless the dollar just starts ripping today. And even if they do turn out a little bit more hawkish in the statement, the degree to which you'll see the dollar really react, it's going to be tough. And it's the last day of the month, guys. So a lot of these trades and setups that we're talking about today, it's probably best off, if you're not involved right now, let the dust settle for the next 2 days and the new monthly open to kind of give us a little bit more clarity on where we are. I think on this, like I said, for now, immediate focus 74.50, 75, 15, 74.80, this region here, area of interest, great area of interest for possible exhaustion. Questions, comments, concerns? Okay. Let me just take a quick look at this actually on the near-term chart. I wanted to see something. This is a 30-minute. One point, 2.3 point. Okay. So either way it stacks up. 75.50 comes up as a target. Oh, even into tomorrow. There's that 75.15, 74.80 level. Near-term support. Hit that Asia low. Put about right there. 73.76. All right, so anyone who's looking to do this near term, I've been trying to scope this out, and this kind of just popped out at me right now. Keep an eye on this. Take a snapshot of this chart if you would like. Ha! 1618 comes right there as well. 74.50. Cool. And the 100, nice pivot, resistance, pivot, break up, support. Keep these levels. They look good. Okay, I digress. We are good on time still. Okay, so that's Kiwi number 5 and number 6, Aussie Kiwi. So this one we have to go neutral on for now, right? Because they both broke higher. The Aussie Kiwi rally and ripperoo that we were targeting hit our final target, which was 110.67, excuse me. And then we put a bullish invalidation at 110. Okay, well, we broke below 110, so we have to go neutral. What this thing does from here, honestly, guys, I just don't think it's not even worth the play. You kind of need to let it settle at this point. Bring your attention again to the daily chart. This was one that we were looking at as sort of a clear cut, break of the downtrend. Here's the upper median line parallel, or basic slope resistance, whatever you want to call it. 1 touch, 2 touch, 3 touch, 4 touch. We dribbled one day, we broke higher. Big confluence resistance right up here, right? That was the 50% retracement of the decline. That was also the 50 line for the ascending breakout sort of trend line. So right there, we were like, look, take your profits if you have them. Bring your stops up if you want to leave a little bit on the table to break even. But if we break below 110, that's pretty much going to refute what just happened. Well, it pretty much just refuted what just happened. Today's move takes us back below the 100-day moving average, back below channel resistance, back below the 50 line. So if this slope has any merits, even within the confines of this advance, you now have the risk for a drop, basically towards the monthly lows, 108.80. So for me, Aussie Kiwi's a no touch here. I also don't like the fact that this thing turned right ahead of 60. If it was going to be more of a prominent breakout, you would have wanted the momentum signature to finally clear 60 to the upside again. So unfortunately on this one, we have to shelf it. Like I said, we got stopped at break even on the last quarter of the trade with the move back below 110. But now that we've broken below this region, this was the last region I wanted to see. Now that we've broken below that, I got no trade on this. And in fact, again, this was a very clean, objective weekly opening range. Here's your weekly open. You set a low, you test a high, you come back, test a low, spends a couple of days there or a couple of sessions there, breaks through, looking for a late week low. So this thing still could have a little bit more downside to go. Near-term support, 108.92 for anyone who may be holding shorts. Basically, the only thing I'll put this back in my good graces is if we get back above that median line. Remember, the formation here is actually pretty clean, guys. Right? This pitchfork, we talked about this yesterday, the parallels. So it would need to get back above basically 109.70s, 109.65 area for me to even start to attempt to look at this back to the long side. Other than that, risk is lower. Questions on Aussie Kiwi? Okay. A little bit more of a neutral stance at this point on Aussie Key. That's number 6. Number 7 is dollar yen. The abomination's doing what the abomination does. There's nothing to talk about here. I think it continues to go sideways until inevitably breaks. We do want to see inevitably again a downside break in dollar yen. Here's what it looks like on the weekly charts. We came off of a beautiful spot late last year. We opened this year on top of the confluence of the 200 long-term and 52-week near-term moving averages. Once we finally broke below that, again, 110.15, and the next downside target's 107.83. We haven't been able to get into that region. There's basic trendline support off the 2012 lows. As you can see here, 1 touch, 2 touch, 3 touch, 4 touch. That converges basically on last year's low week close, which comes in at 107.83. And then that former opening range lows for the year that we made in April, that comes in at, what is that, like 108 and change. So that's sweet spot is kind of still what I'm looking for the break. Now you got the momentum signature break here, the trigger break in the weekly charts earlier this month. So the decline, I still think is what you're focused on here. There's really nothing to sort of shake me out per se. So that's the weekly chart. It's really important where we close the week here, guys. If we wick below this and close back above, that to me would be a little bit more of a rebound play first before continuation. If we close below, you're looking at 106.37 as just the next near-term target. That's from the weekly standpoint, 1,000 feet up, right? Here's what it looks like on the daily. Okay. Downside break of a descending formation, typically going to be a sharp move. Started off pretty sharp, but there's that 50% retracement. This is a longer term off the low from 2016. You can see a little bit of a hesitation there. And now we're in some sort of consolidation, okay? Making lower highs, making higher lows. And you look for that break to give us guidance. Ultimately, 2017 low day close, like I said, 107.83. 1618 extension of the decline gives us 107.45. So 2 spots of interest. Again, 107.45 region actually converges on basic trendline support off the lows from just last 2016 calendar year. 1, 2, 3. converges right there, basically into the open of next week. Maybe on my birthday right here, it's going to give us a drop right into 107.45, then rip. Who knows? But from now till then, keep in mind, we just looked at the index, right? And the analog there, sideways to lower for the next couple of weeks, or for the next week or so, could be the game plan here for dollar yen. So I'm cautiously bearish. The momentum signature is not the most convincing at this point. You can see that we're kind of just struggling at 70. If we close back above it, it's not really going to be the most bearish momentum profile. But intraday, have to just respect what near-term price action is saying. Okay, here's that consolidation. We started off the week saying stay bearish below 109.55, right? Well, that's going to be still the same level. Just ahead of it is that former slope support. So that comes in with the weekly opening range highs. Let's call it 109.20 first. This would be a great spot to hold as resistance if we're going to move lower. But basically, that's my near-term bearish invalidation is 109.54. If I think that's what I put on the last update, right? Aussie Kiwi we talked about. There's the break into Aussie Kiwi. We're pulling back. Now we've broken below here, so we're kind of waiting for resolution there. Dollar yen, 109.55. Okay, that's where we started off the week saying bearish invalidation. We got as high as 109.21. You guys know Jamie had a short entry up there earlier in the week. On this stretch, obviously, we failed. So for us, we're kind of just waiting for a resolution of this near-term range. The only thing that would put me back bullish or looking to get on the longs would be a break above 110.23. Again, that's like a big deal if we make it back above this again. But there's just a lot here. Questions? Okay. Next up on tap is Sterling CAD, an interesting pair. Not sure what's happening with the charts here. Okay. Sterling CAD. And here's what Sterling CAD looked like earlier in the week. So not going to go over this quite as in detail because we did cover it yesterday pretty well. Remember, our long positions were looking for exhaustion near the upper parallel. It took a little bit higher than we were looking for, but we were looking for 75.20s essentially to kind of cap that and look for short exposure of that. It pushed higher, but we obviously had a pretty mean reversion trade with the pullback. We opened the week at resistance. I was looking for a hold or a possible short entry near 174.90. Ideally 175 would have been the actual stretch right back into former channel support. Obviously, it failed on a big, massive outside reversal candle here on the 4-hour chart. So, look, I'm a little bit more neutral here to lower. What I do like is that it looks like it made an objective press through the weekly opening range highs. Again, I marker everything for you guys. Here's your weekly open. Here's your weekly opening range highs. We tried to press through, failed and pulled back pretty mean reversion like, right? So for me, I'd still think that the risk is for a move lower. Now, 74.91 is the high day reversal close for this year, right? For this month. So it's not, that it's not too much of a long-term technical level just yet. But for me, as long as we stay below 74.91, basically 75, this thing is still at risk. My humble opinion. The pullback eventually would be corrective in nature, ideally, based on the advance. And we would look to buy that. But from here, I do still think that price needs to make a new low, before we start to mark resumption. So let's see if we can't get some slope here on the downside to at least give us a level to which we can trade against if it does break. I just don't see anything just yet. Huh. Yeah, watch 74.91. Basically, watch 75 handle. As long as you stay below 75 handle, the risk could be lower. Again, a move into a new fresh low to complete some sort of near-term correction play, I think would give us an opportunity to get back on the long side. Ultimately, looking for 77.30s on this later this year. Okay. And that is pound CAD. Last but not least, I guess let's cover pound dollar. Where would we be without the sterling on the books? Here's what sterling looks like. So again, on the swing side of trade, we thought it prudent to try to take a short yesterday, guys. Obviously, got stopped out. So I was actually tempted to jump right back in, but we didn't. And a 618 retracement here ended up being an outside 4-hour reversal bar right off that retracement. A couple of pips higher, it got into this 42.12. It's at 42.06. But I don't want to fight this. And more than anything, you guys know the longer term picture for me and Jamie, specifically on pound, has been very, very constructive. We've been bullish on this thing for a while. So not the pair that I want to get aggressive on trying to fight. I do think it still needs some sort of corrective. Look, the momentum profile hasn't been constructive. Even though we've still been over 70, it hasn't been from a slope standpoint in an offensive stance at all. But even throughout that, the price decline has been mild at best. I don't know what to do on this one, guys. I'm going to put a neutral stance on this. Last update that we had on pound was right here on the open of the week. Okay, we were talking about the fact that look, if we get a break of downside channel, great. If we get one spike into 144, I'd sell that, right? I'd sell that like no one's business just for a near-term correction play. But right now, if we get a drop lower, look for 140.28, 139.43 would have been like a great entry. Former slope resistance for the channel, now support, right? So what do? It got the first target 140.24, 140.28. Cool. This break had me thinking, great entry right here. I was just waiting for it, and then we ripped right higher and didn't get a chance to get in. Trying to play a short off of this resistance in the weekly opening range highs didn't work. Put a gun to my head right now, guys, telling me what to do, Boutros, so I'll shoot you. I'd probably just say, yeah, I still think you move lower against 142. Try to look for a drop at least towards that parallel 140.60, but things for me on this are not quite as clear at this point. So I will concede the pound for now. All slopes just keep giving out on this thing. And even from a weekly opening range, right? So let's say, you know what, we're so confused. Let me just look at what near-term price action is doing. Well, here's your weekly open. You make a high, you set a low, false break of the weekly opening range low, but then false break of the weekly opening range high. What the hell? I'm not going to mess with this. It's the end of the week. It's the end of the month, guys. There's likely going to be some flow rebalancing here, and it's the pound, notorious for this kind of stuff. So levels remain unchanged, but I'm going to take a neutral stance here on pound. Again, pistol to my head, I would still think that you look lower. Did we hit Aussie yen? It's the one last thing I think that we didn't cover that we've been following over on the intraday charts. Here's Aussie. We talked about that early in the week. Actually, the levels remain unchanged from there. Aussie yen looked like this. And we said, you know what, as long as we stay below 88.40, look for a move lower. We didn't quite get into the 87.27 barrier. Here's Aussie yen. Okay, we went through 87.70. We didn't quite get into the 87.27 barrier again before this thing turned. And here we are attempting a break of that proposed channel, right? Now remember, we don't have too many touches on this channel. So we don't want to stress that slope too much, but the weekly opening range highs and a clear pivot in price right here at 88.40 is still going to be our level of invalidation. If we make it through that, you're basically looking for a range right back run into the highs. Remember, the whole premise of this trade since the start of the month when we first started talking about it is the fact that we've made a very clear-cut, definitive monthly opening range between basic technical levels of significance. The 786 retracement, 2015 lows. You had slope there. That gave you 89 into 89.16 on the bottom end, a basic 38.2 of the advance, the 100-day moving average. That gave you 87.27. And the guidance that we need is a break of this range. Near term, we had an outside reversal here, a big old daily outside reversal right off resistance. That put us bearish right off the mark. And that's where this slope, came from. That's where the attempt of this slope came from. So at this point, again, you have a very clear-cut weekly opening range. Here's your weekly open. You set a high, you set a low, you defend the high, look for a break of that. If we see a topside break, look for a run back towards the range highs. A downside break, again, 87.27 was going to be our initial target. That's going to be the range lows, remember. But slope would have this go down towards 87.60. And even down 86.16 would be a 618 on a longer term play. But you'd need to see a little bit more of a yen strength play there, which we do favor on dollar yen. So not giving up on this, not want to stressing this slope yet, but not giving up on this. Still think you could get a possible move lower. Questions on Aussie yen? Okay, that's what I have for today, guys. Let me know if you have any other questions or specific trades you do want to go over. Remember, the FOMC interest rate decision is going to come out the post. The policy statement is going to come out at 2. I'll be sure to tweet that, so keep your eyes peeled there. Kelly, I'll get you back on SB Squawk as soon as I can, so don't worry about that. And we will be back tomorrow to do this again and give you sort of a wrap up of the week before Friday's non-farm payroll release. Keep in mind rather that we do have the midweek strategy webinar again moved to Thursday this week. So that's going to be tomorrow shortly after the intraday strategy webinar at 8:30. We'll have Jamie come up at 11 o'clock tomorrow to do the midweek strategy webinar. All right, guys, if there are no other questions, I'm going to wrap it up here. Keep in mind it's the end of the week. I keep saying week. I wish it was the end of the week. It's the end of the month, guys, and we're just heading into a new calendar month. So do yourself a favor. Don't load up heavy on anything. And let's kind of just like clear the dust. Let the dust settle. Open up February with a little bit more of a fresh outlook. And we'll take it from there. All right? Best luck trading, guys. Cheers.